Hello everyone, welcome back to the channel. This is Fair Value Finder, and today we are taking a look at a stock that I mentioned yesterday in my video. We were talking about lumber companies, and I had mentioned West Fraser Timber, a stock that I've owned for a little bit, and I'm interested in taking a look at. This company over the last few years has been killing it, but the question is whether or not that is sustainable. So they deal in wood products. They have a lot of facilities. They're headquartered in Canada. I know that I said before that I don't really like looking at international companies, but I'm reading the book Value Investing today, and he basically says don't sleep on international companies because oftentimes their markets do not move with the US markets. They move in the opposite direction. And if it's a growing or emerging market, then you can get a greater return. So I'm not going to limit myself to just US companies. Now but this company has 34 lumber mills, 15 OSB facilities, 6 renewable energy facilities, 5 pulp and paper mills, 3 plywood facilities, 3 MDF facilities, 2 particle board facilities, 1 LVL facility, 1 treated wood facility, and 1 veneer facility. So they do a lot with wood. And I'm a fan of woodworking. It's one of my favorite hobbies. The company that I used to work for, we specifically dealt in woodworking tools, and that company was growing very, very quick. Stock came to the market in 2001 and kind of had slow, mostly consistent growth. I mean, there were a little while where it dipped below trend, but it hopped back up in 2015, kind of peaked in 2018 before a big drop leading to its bottom in 2020. And off that bottom, it almost 10x'd to a peak in late 2022, and it's kind of been trading sideways since then. I would have gotten in around a point here or here because I'm up 10% on my position, but it's something that I'd be interested in holding on to. It's only one share, so nothing too crazy with it. And if we take a look at the numbers, we can see that growth that I was talking about. I don't know how consistent this will be. Analysts are only expecting 8 cents in earnings this year. So compared to the 21 last year, it might be at its end already with that trend. But we see they were growing their revenues almost 37.5% year over year, ending at $9.7 billion in 2022. Now, if they can continue on that trend, we'd be looking at something around 13 this year. And that's not their only super strong number. They're strong on revenues. They have been strong recently on earnings. They were negative in 2019, but 2020, 2021, and 2022, they were just killing it. Like, look at those earnings yields. The share count, probably part of the issue with the decline was in 2020, they issued a lot of shares going from 68 million to 109 million, and they've been on the decline since then. They bought back shares. They were back to about 94, and hopefully they can continue buying back maybe about 10% every year. Seems to be what they do. They had grown it at such a rate where it was the equivalent to 10% every year. Shareholders' equity is strong, growing, stable, 7.6. That is very good. I'd like to see a bit more difference in here. That's almost a negligible difference. It's literally 0% because I don't have decimal points on. The free cash flow, they have been strong on their free cash flow. Aside from 2019, we see that they hit a peak in 2021 with almost $3 billion in free cash flow, and that's almost 28% cash flow yield. Assets, they grew like crazy up until 2021. a bit of a dip in 2022, and we'll see where they go from there. This, of course, is projecting it out at the growth rate of 40% that they were experiencing, although we doubt that that's going to happen. This would be a best case scenario. Liabilities, they are growing, but nowhere near as fast. Again, that hit a peak in 2021 and is on the decline. Tangible book value is positive, consistently positive, and growing. Even this last year, they grew it, which is nice to see. So they come out with a book value per share at the end of last year of $52.37, which is pretty good for a stock that was trading for $73. So it's more of an asset play, a lumber play, than it is the actual business itself, I feel. And then they had 12 of that was cash on hand. So they definitely have what they need to do acquisitions or build new facilities, whatever they need to do to grow the company. They definitely have cash for. Dividend, they didn't start paying a dividend until 2021. This last year, they paid $1.15. This year, they'd be on trend if they stick with it for $1.30. And then I'm only projecting out that they do the typical 1 cent per share growth that we see in companies, just to say that they rose their dividends. So that gives it a 1.5% yield, which is nothing crazy. We need some more data points to really be able to tell what kind of growth they're putting into that. They've only had it for 2 years. The share price, we see it was $41 back in 2019. It's doubled since then. So that beats out the 10%, 8 to 10% average that you see with the market. We see 21%. Over the last 2 years, you've only been getting that 8% though. ROE is towards the lower end of the range that we like to see. We want to see at least a 20. We see a 26, 38 in 2021. 2021 was by far their best year. And then a PE, they trade low PE for the growth that they were experiencing. It's almost like the stock really didn't catch up to the value ever. Maybe people were just projecting on the future and said that it was a short-term thing. And with the declines we see from 2021 to 2022, it might not have been wrong. It gives some pretty extreme valuations for the company. Cash flow is the strongest, where we see hundreds of dollars. At the end of last year, $369, excuse me. And this year, if they're able to continue on the growth trend that we've seen, it'd be $450. The balance sheet, like I said, this is mostly an asset play. $243 moves up to $405 if they continue at the rate that they're going. Dividend, $209. That's mostly due to the fact that they did not pay a dividend for a while, so that can almost be forgotten. But then earnings, the earnings slip away to nothing this year. If they do come in as analysts are projecting with the 8 cents per share, they move from $98 in value to 37 cents. So that is something to be aware of. Give us the buy ranges down here. I mean, this would be incredibly undervalued. And the Lynch formula agrees, saying that it's incredibly undervalued, with a 15.88 when A1 would be fair value. 15 times undervalued based on the growth that they've experienced historically. But we know that that is slowing, so that's not exactly a metric that we need to be concerned about. But what do we look at for a quality company? We look at the ROE. That is good. We look at the share count. They did raise it in 2020. They're back on the track with buying them back. So that's good. Earnings yield is good. Free cash flow yield is good. Debt to equity is good. So at least as it stands from the end of last year, they were a pretty quality company, and definitely something that I would be considering. I'm definitely curious about how they're going to operate this year, though, and if they can beat this 8 cents per share. I mean, ideally, they get it above $20, but there doesn't seem to be a lot of hope for that. With the look at the lumber prices, we can see back at the end of this last year, it was 375. Right now, it's 344. It really hit its peak back in 2021, 1,454. And I'm sure we all know about the lumber shortages and such back then. So this one's an interesting one, definitely one. I'm just going to put it on watch list. I don't know if I can give it a buy, hold, or sell rating. I want to lean towards a buy from the numbers of this last year, but the greatness could be over, especially that seems to be what analysts are thinking. So we'd have to dive deeper into it. We'd have to get some earnings and really look into them to see what's going on with the company. But I want to thank you guys for watching. Please like if you enjoyed it, you learned anything. Comment if you disagree with anything or if there's a stock you want me to take a look at. And subscribe so that you can see more content like this. And I will catch you next time.